This is the Business Breakfast on Dubai Eye 103.8
with Richard Dean, Brandy Scott and Tom Urquhart
on the UAE's #1 talk radio station.
All right, following up on that top story this morning, Dubai property sales setting a new February record on top of last year's February record, on top of last month's January record for volumes. We are joined by the man who writes the report, crunches all the numbers. Jan Jahinki is the CEO of Property Monitor. He's also the Director of Market Intelligence and Research for Cavendish Maxwell. Jan, it's lovely to see you. Good morning.
Likewise. Morning, Ramadan Kareem.
Ramadan Kareem, nice cardigan.
Thank you.
Rich and I have already had a discussion about your sartorial style this morning. Let's, though, have a look at your numbers. So, new volume record for February, but you described the price appreciation that we've seen as moderate. What does that tell us?
Yeah, so price appreciation has been trending down. We've had nice, steady growth last year, but we had 16.4% growth throughout the year. That's huge, right? Really big numbers, something that is not sustainable long term. So we opened the year in January with a small increase of under 0.2%, last month at 0.8%. So we're just over 1% yearly price appreciation. Our forecast is to see between 5 to 8, so it sits right in between that forecast, right? So we're trending right now to see 6% year. But the volume of sales is going hell for leather, right? If I didn't come on the show saying there was yet another record in Dubai, it would be odd. February was up, record month. About 12,000 transactions. Last year's February was also a record February at about 9,000. If we went back a year further, it was 6,000. So we've seen huge growth over those last couple of years. February is typically one of the busier months of the year as things start to ramp up. But specifically, we're just seeing transactions well over 10,000 every month. These are big numbers. If we went back pre-pandemic, we're looking at about 2,500, 3,000 transactions a month.
Thank you for that comparison, actually. That is useful. So if you were to spin a narrative around the increasing volumes but the modest price appreciation, what would you tell me was actually happening on the ground?
So it's a tale of two markets, right? This is always looking at that existing home, so your ready completed market and the off-plan market. You've heard me time and time again say the recovery of this market started with stuff that was completed, ready to move in, big outdoor spaces. They rapidly appreciated. They have, for the most part, tapered off, topped out. Right, so we're not seeing as aggressive gains there. The off-plan market came in with competitive prices, almost to undercut some of that ready market in the beginning. Now we've seen some of that taper off as well, but keep growing. So you've got a lot of new launches coming on right now. So there's not as aggressive price appreciation in those because they want to stay competitive, right? Last year we saw almost a launch a day. This year we haven't finished the February numbers because there were so many. It's more than a launch every day, right? So things are going very, very strong in the off-plan launch market. We're going to see a significant amount of new launches this year. We're already seeing probably about 25,000 units come to market in just 2 months alone.
And I know that you have been digging into the off-plan market. We've had some discrepancies in the numbers before. So you're doing a bit of extra maths around that. What have you found for February?
So look, the data's caught up, right? So we're looking at a good position. We're not having to be as looking back each month with it. The number of completed property transactions at existing homes has stayed pretty flat throughout the last year. You're seeing about 5,000 trade a month. Off plans where you're seeing those gains come in, and it's really tied to when those launches are happening. You have a launch, and then you'll see over the next 3 months, most of that sales come through. We're seeing that number creep up month after month after month. The percentage of market share is now shifted back into the dominance of off-plan, and it's going to be there for the considerable future.
One of the interesting things in this report for me, you say with the off-plan property that's starting to mature, to hit the point that you could sell it if you wanted to, we're not seeing a huge amount of flipping.
We're not, and thankfully, and we don't want to, those off-plan resales or those flippings, which can sometimes be speculative activity, most of those sales are still within 12 months of handover. So it's someone that's had that property, they've purchased it, they've probably got 50, 60, 70% into it now. They're just selling that on in that last year before handover. If we start seeing it where someone's buying and then selling 6, 12 months in with still a couple of years to go in that's speculative activity, trying to make quick money. That's a very dangerous plan. With the amount of launches coming and new inventory that's going to be there, it's going to be even more dangerous and something I'd avoid people to really proceed with caution with if that's your objective.
Well, while we are talking about off-plan, as you note, we're set to get a number of new master communities. We knew about the 2 that were coming from EMA, but you say there's 3. What's the third?
So there's 3. I'm not jumping the gun too much. They've put some stuff out loosely around it. So you had EMA do 2 right near each other, just around the Oasis and DIP. On the same huge plot that EMA has one of theirs coming in, you have Etihad Rail that cuts through that. On that cut through, the other side of that, Damac's going to be doing a new launch.
How big, do we know?
It is...
By which I mean, do you know?
Yeah, I've got a square footage off my head. I can't remember it. I think it's about half the size of what Damac Lagoons is looking at. I'm doing it visually right now, not with the exact numbers. Don't know the makeup of it yet. It's more than likely going to be mixed between multifamily and single family, so apartment buildings, villas and townhouses. And it's right where that Etihad Rail cuts through there, along that 611 corridor.
So all 3 of those projects roughly in the same direction. What does that do to the shape of Dubai?
So we're looking at urban sprawl, where I'm actually a little surprised with some of it. We knew there was going to be some more along 611. I thought the Al Qudra corridor, so out past Nashama, Cherrywoods and those areas, would be the next to see more happen there. It hasn't. So now we're pushing more towards, the southwest sections of Dubai, towards Abu Dhabi along that 611 corridor. There's some great plots out there. This is where the Arabian Water Canal was going to be originally. So those plots now are being, repurposed and different communities coming in. I think you're going to see more. We're really tracking land sales. There haven't been any big ones in the last 2 months other than the ones that have been launched, but expect more to come. And then that will eventually swing back around through Dubai South, the backside of that where you've got Emaar South, and probably come right up to where you've got Palm Jebel Ali. So I expect over the next decade, that will be the main area of new Dubai expansion.
One of the things that you note is that the new master communities coming in is going to add more villa and townhouse stock, badly needed at the moment. Is it though? Because the EMA pair are very high end. Does something at that price point really actually alleviate pressure for the average person buying?
No. Sorry to cut you off, but no. It will add to, there is definitely demand in the segment that they're building for. They are very smart. They've done their research with it. What's needed is more in that mid to upper mid market in the villa and townhouse segment, which we could see in other areas that come around there as well, maybe a little further towards the Abu Dhabi border. But it's very much needed. About 15% of projects that were launched last year and the year before were for that single family market. If you look at the total existing housing stock across Dubai, it's roughly those numbers, maybe a little higher in single family. More is desperately needed, but it's tough to build those communities unless you're an Emaar, a Damac, a Majid Al Futtaim, those big developers that can take these huge swaths of land and build master communities. So definitely need to see more across different price points. What's coming to market, though, I think will be absorbed rather quickly.
20 seconds, FOMC meeting a week from tomorrow. Your report had mortgages down last month.
Yep.
What are you expecting to see and what impact will it have?
No change. No change in those target rates. I don't think you'll see changes towards the tail end of the year. But when we do see them, what will happen? So mortgage activity here will still stay high. We've defined everything already. When they change and when we see probably a 75 to 100 basis point drop, you're going to see a big spike in refinance activity. Those people that were at higher rates, they probably had them for a year and a half, they will lock in. That will be the magic number, about 75, 100 basis points, spike in mortgage activity going forward.
Jean Jahinki, COO of Property Monitor and Director of Market Intelligence and Research at Cavendish Maxwell. Thank you for your time this morning.
Always a pleasure.